This interview is brought to you in association with Rabobank.
Hello and welcome to this Rural Delivery online interview. I'm Roger Bourne, and today I'm speaking with Matt Costello, who's Rabobank's Food and Agribusiness Research and Advisory Analyst for Animal Proteins. Matt, welcome to the program.
Thanks, Roger. Great to be here.
Matt, you've just issued your beef quarterly for the first quarter of 2015, and you've been in New Zealand talking to growers about this. Looking across the world, can we just get the big headline as to what you think has happened so far this year and what we're likely to see as we travel through the rest of 2015?
Well, Roger, from what we're seeing, 2015 shapes to be this ongoing tight supply story. And if we look globally, there has already been tight supplies in most markets, but that has somewhat been offset by this terrible situation in Australia with high supplies coming out of Australia for the last couple of years. But what we do expect to transpire through 2015 is tightening in supply in Australia, which is probably going to compound things and essentially test and challenge consumers' willingness to pay in some of these markets that are very, very short of beef.
Okay, well, let's just start with Australia then, as we dive into some of these countries specifically. The story there is all about drought. Slaughter rates are incredible. Can't go on forever, though. Eventually you're going to run out of stock.
Exactly, Roger, and what we thought coming into 2014, or this time last year, we looked at the numbers we'd processed through 2013 and said, you know, we can't continue to do what we did in 2013, and lo and behold, we did more in 2014. So pretty much record slaughter 2014 over 2013, which equaled record exports. So as you rightly point out, Roger, we can't continue to kill given how much we have processed. I think looking at the official herd numbers and statistics, I think we've undershot those numbers just because of where and how much cattle there's actually been out there. But almost regardless of the seasonal conditions, and we pray for some rain, particularly through Queensland and northern New South Wales, the volumes just can't continue to come onto the market. But in saying that, throughout the first quarter of 2015, Australia has exported and processed just as much, and if not higher than what we did in 2014. So it's already been a big start to the year, continuing this high supply, high export theme. But encouragingly for farmers right across Australia, the next 3-month outlook for rainfall is particularly encouraging, particularly in southern Australia, where I think they expect 80% chance of above average rainfall. So I think the writing's on the wall with supply and certainly a large increase in farmer prices. Hopefully the rainfall drives it and we get that really quick change and turnaround to favour the producers. But nevertheless, in the next sort of 12 months, we do expect cattle supplies to fall anywhere from about 1 million head less slaughter likely in 2015 compared to 2014.
Okay, so if we head across the US, where we've actually got it's not so much a supply situation, it's more a demand situation, very volatile prices there. What's driving that?
Yeah, so they've probably gone through what Australia's going through in terms of very high liquidation of the herd, and now and in 2014, and we expect it again in 2015, producers are retaining their cows, and what that has essentially done is dry up supplies of lean beef, which gets manufactured and mixed into their lot feeding, cattle feeding type production system. So as producers retain cows to look to expand the herd and rebuild the herd, what it essentially means is for countries such as New Zealand and Australia who produce lots of grass-fed lean beef, that demand for that product remains extremely strong.
I was surprised to see actually that the numbers for New Zealand beef exports up to the US are now around 62% of exports. What's been the trend there over the last couple of years?
Yeah, that month particularly was very high given what's come out of Australia. So I'm not sure if importers were looking just to get their hands on stocks while they're available with expected tightening supplies, both seasonally from what New Zealand produces, but also with this expectation of tighter supplies out of Australia. But you know what we continue to see there is a marketplace in America which has essentially stripped the supplies from neighbouring countries such as Mexico and Canada to keep domestic consumption in the US chugging along, And then once they did that, they then now move more strongly towards both New Zealand and Australian suppliers. So, if you're an Australian supplier, whether it be an exporter, processor, or most certainly a beef producer from New Zealand, then that outlook in itself remains extremely positive. Our analyst based in the US expects beef production in 2015 to remain relatively steady to last year, which was quite a significant drop on the 5-year average. So if you do get that rebuilding phase continuing, it's going to be a great news story for New Zealand beef producers, given and bearing in mind that Australia will have less supply. But the more broader picture it's obviously not just a beef story and Australia versus New Zealand competitive story. It's obviously also about protein more generally, and what we do expect to see from a beef perspective is consumers' willingness to pay be challenged this year. Their love of beef will be certainly put to the test, particularly when you're looking at pork production to increase probably about 6% in 2015, poultry about 3 or 4%. And if you talk about what does that mean just more generally from a price perspective, well, beef's about 3 times more expensive than poultry, and it's very roughly about double the price of pork. So as consumers, and albeit we know the US economy is improving, they do look to substitute, particularly at times when other competing proteins are much cheaper, and we do expect high production in both pork and poultry to challenge beef's competitiveness.
How does that play out in China, where I understand there's a very strong link between beef consumption and wealth?
Yep.
That's an economy which continues to grow, but it's perhaps come off the rapid boil that it was on. Are we going to be able to see more elasticity in terms of that pricing in China, or have we reached a point where perhaps, like the US, there's a limit?
Yeah, good question, Roger, because it's probably the first time, well, so far in 2015, where we've seen China get the wobbles a little bit. We've seen demand from a sheep meat perspective so far in 2015 be quite sluggish, which is probably more a range of factors that they're happening with their own domestic production. But if you're looking at beef compared to the US, for instance, US, they eat beef, they eat burgers, they like mince, and so it's very much a staple part of their diet, whereas if you compare that to China, consumption is still very, very small, albeit you're across a massive population base. But, from that perspective, we're still, I think, New Zealand exports to China were about 10% of total exports in 2014. So we are sending more product there than what we have done in the past, but ultimately they are massive, massive consumers of pork and poultry, and also, seafood to a large extent as well. So what's certainly benefited New Zealand exports has been, to the detriment of, I suppose, consumers over there, has been some of these disease issues that they've had with some of these competing proteins. So particularly in both pork and poultry production with disease carcasses and chemical residue found on chicken. So as long as New Zealand product can continue to differentiate itself at that higher price level, then I think the future is still fantastic into China, albeit it has been a little bit slower than we did expect so far this year.
How visible is the New Zealand beef brand, do you think, to a consumer in China? Do they know that they're eating New Zealand beef?
It probably varies a lot depending on where the product's ending up. I'm sure when you're looking into some of these higher end restaurants and hotel chains, then there's obviously this strong branding push to highlight to the consumers where they're paying for. Because in some of these markets, you could be paying upwards to $100 for a steak. So you need to make sure you're telling a story. And I think to a large extent, if you look across the New Zealand sector, it is very much about individual branding, and you could say the same about Australian exports into the marketplace. But I think there's been discussion around the need and the benefits of potentially having this New Zealand brand, which sort of overarches the whole industry, which gives this sort of consistent brand and consistent messaging. I almost like to call it provenance branding, to highlight to a consumer that expecting them to pay either for beef or against other proteins, or indeed beef against competitors around the world. We are a high-cost producing nation, so we need to be able to portray a story and to exactly define why and what the benefits are of consuming New Zealand beef.
can you just give us a bit of a picture of the stories that you're hearing back from New Zealand farmers? You've been out there talking to them about the first quarter. What sort of level of confidence do you see that they have? What things are troubling them? What do you think they're optimistic about?
Yeah, our clients, Roger, were pretty optimistic about how the beef outlook is, and I think for me, I can hang my hat a little bit more positively for a longer term, particularly around some of those Australian-US dynamics we've discussed. Obviously disappointed with how sheep meat prices have been. I certainly didn't think they would probably get to the low point that they have this year, but unfortunately, when you've got such dry conditions impacting across the country, prices will come off. And then there's also been quite a few unknowns around the marketplace, not just the drought conditions, but you're looking at China, and I think we didn't predict them to be a little bit wobbly as what they've been so far this year. The oil prices, currency, the US currencies obviously helped reduce it in New Zealand dollar terms, but against most other currencies, our economy is still performing very strongly. So relative to the EU and these other countries, we're still paying, or the currency is still quite high. So I think overall, very, very positive, albeit this first quarter prices for lambs haven't been as strong as we'd all like to see. But from a beef perspective and moving into 2015, then we're certainly, our clients are certainly very happy with where things are projected to go towards this year.
Oh, look, that's great to hear. Matt, thanks very much for your time today. We really appreciate it. Anyone who else wants to have a closer look at these numbers can, of course, jump in online and have a look at the full update for themselves. Thanks again, Matt. We really appreciate it.
Great. Thanks, Roger.
This interview was brought to you in association with Rabobank.